There's been a decisive shift in the San Diego housing market. Mortgage rates have seen a little bit of a change over these recent weeks, but where are they going to be over the next 5 years? And what are other real estate agents saying about the housing market? That's what we're going to get into right now. So the decisive shift in the housing market is that San Diego falls in U.S. price growth rankings. San Diego County's home price is down 0.61% annually. And just keep in mind, as we're going through this, keep this date, August 27th, 2025, because it's going to be important as we show you some other articles here. San Diego's home price dropped for the first time in 2 years in a closely watched housing index. The San Diego area home price decrease was 0.61%. The last time home prices were down year over year was June 2023. Prices in most metro areas in the 20-city index were sluggish but varied considerably. For instance, New York Metro was up 7.03% annually, but Tampa was down 2.38%. Still, for the overall U.S. market, the pace of price appreciation was its slowest in 2 years. And we've definitely seen that right here in San Diego, working with buyers and sellers. The price appreciation, or percent homes are going over list, is much lower than it has been before. Not even over list. There's a lot under list. There's been a lot of price reductions out there. Lisa Sturdivant, chief economist at Bright MLS, said sales were slow in June. Notice how they keep mentioning June in this article, despite lower mortgage rates compared to earlier in the year and more homes on the market. She said home inventory growth, largely because homes are taking longer to sell, could cause more markets to see price drops later in the year. As we did see here in San Diego, there's more homes coming on the market. They're sitting a little bit longer. They're adding to the total inventory, causing that to go up. Now we have seen a little bit of a downtrend over these last few months, but that was a story that we were seeing, and buyers will have more leverage in many, but not all markets. Sellers will need to adjust price expectations to reflect the transitioning market. So here's the data they were looking at, going back 5 years to July of 2020. And basically this Case-Shiller index measures the average change in value of residential real estate in San Diego given a constant level of quality. Now the Case-Shiller home price indices are calculated using a 3-month moving average. Index levels are published with a 2-month lag. Right here, you can see as of June 2025. Last reading that we are seeing year over year, so June 2024 right here, dripped down a little bit, and then we did see it come up, and now we are lower year over year. So even though the 5-year return is up 10.14%, the 1 year is down a little tiny bit. If we go to the table view here, you can see 1 month is down 0.31%, 3-month is up, year to date is up, and the 12-month is down that 0.61%. But as you're looking online, as you are reading articles, just make sure to keep an eye, because June was actually a little bit different market than when we are right now. I'm going to show you where San Diego home prices are currently, because as you're going back and as they're coming out with these, I don't know why they're so delayed, and it just takes a long time for a lot of these reports. So anytime you hear Case-Shiller or anything like that, usually those are looking into the past. As you are looking into the market, maybe you have your searches set up as a buyer, you're seeing what's actually going on in the market, you're talking with your real estate agent as a seller, you're gonna get a much better picture of what's happening right here in the San Diego real estate market. So when those numbers dropped, that was right in here. So here is the 2025 line. You can see that home prices, this is the median sales price, it was down below 2024 by quite a bit. So it was well down here. But since then, you could see the 24 was dropping as we went towards the end of the year. And right here, we crossed over. So as of right now, home prices, median home price right here in San Diego is actually up about 3% compared to this time last year. So the current numbers are definitely a little bit different than we did see back in June. And active listings are on their way down as they peaked back here in June. We're seeing it come down a little bit, but still about 18% above last year. And then here is the average sale to list price right here in San Diego County. As of now, we're looking at 98.7%. So homes are selling a little bit under list price, where last year we were a little bit closer to that 100%. Earlier in 2024, we were well above 100%. And earlier this year, we were much closer to that 100%. As we've seen homes sit longer, as we've seen inventory grow, as we've seen less buyers in the market, the competition has dropped a little bit. And one other aspect that is causing this to drop is sellers are still seeing what homes sold for a few months back, and the pricing at that, maybe a little bit above, causing the homes to sit a little bit longer and ultimately over time either drop their price or sell below their list price. Now back to the original article, the average for the 30-year fixed rate mortgage was 6.77% in the last day of June, according to Freddie Mac. That's down from a high this year of 7.04 in mid-January. But the current numbers are a little bit different. Right here it's seeing 6.58, but where are mortgage rates going to be in the next 5 years? But first, let's see where mortgage rates are right now. You can see they did drop actually just under 6.5. That is a big number, a big kind of psychological level that we haven't seen it cross that level since right back here when we were below it of October of last year. So good news for buyers as mortgage rates do continue to trend down a little bit. But here are the mortgage rate predictions for the next 5 years. Now, mortgage rates are determined by many factors. One of the major factors being the 10-year treasury yield. So as that moves up or down, it tends to have more of an impact on mortgage rates than a few other factors. So look at the 10-year and see what's going on there. Now, mortgage rate forecasts might be best derived from the 10-year treasury note trends. While the two rates are often tracked in the same direction, there's a spread between them that will account for below. So first, let's understand where the treasury yields are heading in the next 5 years. They combine human analysis with data pulled from AI to put together a prediction. So an economist, Michael Wolff, laid out what he expects the 10-year treasury to do over the next 5 years. We expect the 10-year treasury yield to hover near 4.5% for the remainder of 2025, despite a softening economic data and a 50 basis point cut from the Fed in the fourth quarter of 2025. Now that meeting's coming up, and actually this week, you guys, this video will probably be out right as this is happening or right after. It's going to be a huge week. What's happening with the jobs report, it's going to have a big impact on what the Fed is actually going to do going into the end of the year. But the 10-year treasury yield begins to decline shortly in 2026, falling to about 4.1% by 2027 and remaining there for the end of 2029. So here's the 10-year treasury yield going all the way to 2029. Now, it's not much of a movement. Goldman Sachs analysts agree, saying that the 10-year treasury will remain near 4.1%. Now, meanwhile, the Congressional Budget Office forecasts treasury yields to be 4.1 by the end of 2025, down to 4 in 2026, and remain 3.9 through 2029. Now, when they estimate the 5-year spread, the difference between mortgage rates and the 10-year treasury, the difference between the two has been on either side of 2.5% in the recent years. Between 2010 and 2020, it was often near 1.5%. So 10-year treasury at 4% as an example, the spread is 2.5, mortgage rates are gonna be 6.5. Now, as we look back, a historical sample of the 2010s, it was about 1.7. Recent years, the last 3 years, about 2.6. So the estimated 5-year average spread is about 2.1 to 2.3. So as we dive into the 5-year mortgage rate forecast, you're gonna see there's not a ton of difference from where we are right now. As we're looking into 2025, 6.6 to 6.8. Obviously, we're a little bit below that right now. Going all the way to 2029, where it says 6.2 to 6.4%. But as a buyer, make sure to take all of these predictions, everything with a grain of salt, because I'm gonna show you something here, what people were saying this year is gonna happen, and you can see some of them are wildly off. Now here's mortgage rate forecasts. Among 17 forecasts tracked by Resi Club, the average model expected the 30-year fixed rate to finish 2025 at 6.33%. So if you take all of them together, we are almost on track to that. Now this article was actually out in January of this year. So they were predicting it at the beginning of 2025. But you can see some of the outliers where you have Redfin at 6.8, Capital Economics at 6.75. As you get into this middle section, you're kind of where we are right now. Wells Fargo and CoreLogic are some of the closer ones. National Association of Home Builders, 6.53%. As we go down, some of the other ones are going into the National Association of Realtors, predicting at 5.8%. Realtor.com, 6.2%. So where it actually ends, we shall see. But I just want to show you that there's 1,000 different predictions. It's really important to know what's going on in the market right now, and things can change even from week to week. So keep an eye on all this, or we'll keep an eye on all this for you to let you guys know exactly what is going on. But here's another prediction for mortgage rate predictions by top industry experts for 2025 to 2026. So starting with Wells Fargo, they're looking at 6.5% and basically being the same in 2026. Their key insight predicts rates remaining high for longer, not dropping below 6% in the near term. The National Association of Realtors late 2025. They've already changed it. Obviously, right there we saw it was at 5.8. Now they're predicting 6.4 and a 6.1% for next year. Lawrence Yun is their key economist, refers to rates as a magic bullet, emphasizing their significant impact on affordability and demand. He expects a steady decline. Realtor.com, basically the same, about 6.4 and about 6.4. Fannie Mae, 6.5 to 6.1. And you can see on and on where everybody is looking mortgage. Morgan Stanley, they're not predicting. It's going to be GDP dependent, but in 2026, trend lower. And then Freddie Mac saying more inventory, expects the lock-in effect to cool in 2025, bringing more inventory to the market. Homeowners may move earlier as they don't expect significant rate drops. So experts are 6.1 to 6.6. And this one was actually dropped more recently, September 2nd. So a quick little flash over here again, mortgage rates as of now, 6.49%. Once again, whenever I show this, I always like to bring up, yeah, this is for a specific borrower with specific credit, with a specific job, with specific even home price and mortgage loan amount. So 6.5 or 6.49% is just a general ballpark when you're talking with your lender, or if you guys need a lender. We have some awesome lenders right here in San Diego that you could have a conversation with and kind of see where you're at based on your job, based on your credit score and all that kind of stuff, because it could be a little bit higher, it could be a little bit lower, but you can see where the trend is going. So what are other real estate agents saying about the real estate market? Among US residential real estate agents who were surveyed, 81% say buyers are gaining leverage in their local housing market. That share is even higher among agents based in the Southwest, which is exactly where we are. We won't share all the charts, but I'm going to show you a few specific ones. So how real estate agents characterize home buyer urgency in their market today compared to 12 months ago. Are home buyers getting out there? Are they more urgent to get into home? Are they writing more offers? All that stuff. All right, so let's just count San Diego as the Southwest, potentially the West. I'm not sure. I was looking up to see which one we're categorized in, but the story is the same among most of them. So let's go with the Southwest. How many real estate agents characterize home buyer urgency in their market today compared to 12 months ago? We're looking very much in the middle and significantly lower as taking up a big portion of this. How do they characterize seller urgency in their market? Once again, significantly higher, more sellers out there, more sellers want to sell. We've seen it out there too, where people have been waiting for a few years and now it's just time. Whether it be, even though mortgage rates are a little bit higher, there's also more inventory for buyers. So if they're moving somewhere else, if they're moving out of state, etc., there are definitely more options. And you can see most of this is slightly higher to significantly higher. Now, how real estate agents say home buyer demand is in their market compared to 12 months ago. Slightly higher, certain agents right here, you have about the same, and then a big portion of slightly lower to significantly lower. And that's what we've been seeing here in San Diego as well. The home buyer demand is definitely a little bit lower. Home buyers are taking their time a little bit more. There's not necessarily going to see the house. I mean, it happens, but they're sometimes seeing the house that first weekend, maybe coming back for a second showing, maybe taking a little time to make sure it is the home that they actually can see themselves living in long term. And they have a little bit more time, a little bit more room to breathe. So we are definitely seeing that right here. Now, how real estate agents describe their local markets. Right here, we're looking at sellers outnumber buyers by about 83%. Now, I'm thinking this might be Arizona. Even if we go to the West right here, we're still at 52% higher. But here we're seeing a bit more inventory, but we're not seeing quite the numbers that some other areas are seeing. And then to just give you one more data set on where people think mortgage rates are going, here's where real estate agents expect the average 30-year fixed mortgage rate to be at the end of 2025. A huge position in 6% to 7% is most of here. A few are going to see it right in here, 5.5 to 6. But other than that, a lot of people are seeing it end up right here. Like I said, all those predictions are great. Sometimes, obviously, the shorter the prediction is, usually the closer you are to it. 5 years is a bit of a stretch, so things could be completely different 5 years from now, but we're going to keep you updated on this channel, let you know exactly what's going on. If you guys haven't already, subscribe to our newsletter. We're dropping local real estate news every single week. You're going to see what's happening with mortgage rates in there. You're going to see what's happening with boots on the ground, what we're seeing out there in the San Diego real estate market, plus some fun stuff, what's going on around town, etc. So go hit that up. And if you guys are thinking about making the move and you want to start that conversation, we would love to earn your business. All of our contact info is right below. I'm Chris Erickson. We got a real estate crew right here in San Diego, and we got your back when making the move here in San Diego.